Hey everyone, it's Michael Valtos, the founder and trader at Orderflows.com, and I'm proud to present the Orderflow Delta candles. And what they do is they give you a visual representation of Delta in the bar. But before we get started, let me just go through a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. In short, don't trade with the rent money. Don't trade with your kids' college education. Don't trade with the money that you need to survive and live on and buy your food. So, what is Delta? Delta is extremely valuable information for a trader. I mean, most people don't even know what it is, but what it does, it allows you to determine if there's net buying or net selling. And when you see that information, it's really like looking into a crystal ball to see what others are doing in the market. And the real beauty of Delta is that many traders don't even look at it, let alone know how to use it in their trading. For people that trade with order flow, they know what it is, but even that, there's a small percentage that don't really understand it. And what are Delta candles? It turns this information, this text information. You have, the delta, the max delta, the min delta, and puts it into an easy to read format of candlesticks. Now, most traders are already familiar with candlesticks. You've seen candlesticks, charts, and honestly, most people, their introduction to charting, comes through Japanese candlesticks. And the brain processes images at a much faster rate than it does text. So for a lot of people, they get confused. They get scared looking at numbers. It goes back to your days in school when you're scared of, a lot of people hate math because they're scared of numbers for some reason. And, what it does, what the Delta candles do is it takes this information and it puts it in an easy to read format. So what are the four parts of delta in a bar? Well, the beginning delta. Each bar always starts with a delta of 0. Then you have the max delta, which is the most positive delta was in a bar, the min delta, which is the most negative delta was in a bar, and the final delta, which is where the delta closed at when the bar closed. So in case you're wondering, that's what makes the bar, green or red. If it's green, it has a max delta. It closed, in a positive delta. If it's red, it closed with a negative delta. And you have the candle wicks, which determine, how negative it was, what the min delta was or the max delta. You can see here 33. That's why you got this wick. It goes up to 33. In this case, the delta closed at the min delta of minus 42. So you have that red. This bar here, you had a min delta of minus 60. That's this wick here. And it closed at the max delta, which is 114, which is why there's no wick up here because it closed on the max. But it's closed positive, so you have a green candle. So why is this important? Well, when a market is rallying, you should have bars with positive deltas. You should be going up with positive deltas because it means you have net buying coming in. When the market's selling off, you generally have bars with negative delta, which means sellers are in control of the market. And when a market is turning, this is the valuable part. When the market is turning, you'll see a shift from positive delta to negative delta, or from negative delta to positive delta. It depends on which way the market's turning. From moving up to start to move down, or from moving down to start to move up. Now, that's not to say that every bar that is going up is going to have positive delta, because you'll have some bars that have negative delta. They may have been selling early in the bar and buying happened late, but in general, in an up move, you'll have more bars with positive delta, and on a down move, you generally have most of your bars in that move with negative delta. So just real quick, let's play what do we know. That's all I like to play with the market. What do we know? Well, I see here, this is an order flow chart, okay, and this red line is the low. We're coming down into the low, making new lows, got negative delta. Then you hit the low, you got positive delta. You got a strong positive delta to go with it as well. 3483 is the max delta. It closed at 3462. And then the next bar, again, a nice positive delta. Third bar, you got negative delta. Okay, fair enough. Next bar, kind of a small delta, 179. But then in this last bar, it's again a strong positive delta of 1100. So, when you're looking at this chart, right? If you're just, if you're not looking at delta, if you're just looking at the bars, you're thinking, well, is this low going to hold? We hit the low, we sort of bounced up, coming back down a little bit. I don't know. But if you're looking at the delta, you see we're at the low, got a positive delta, hanging around the low for the next 4 bars. Overall positive delta. This one's 971, this one's minus 900. Okay, they kind of say they cancel each other out, but you got 1 bar with negative delta, but you got 4 bars with positive delta. If anything, I'm more inclined to believe this market's going to go up, right? Because you're seeing net buying coming in here at the low. The low is being supported. And what happens? Boom. We rally right here. Nice rally from the 77 area up into the 80s. So if you're not using delta in your trading, you're really leaving, I like to use the term leaving money on the table, because that's information that's available to everybody, but not everybody is using it. And, if there was just one thing you could get out of order flows, out of order flow trading, is using delta in your trading. I mean, if there's just one thing, I mean, there's several things that's great about order flow trading, but I mean, if there was just one thing you could take away, let it be using delta in your trading, and it will change your results for the better. So let's take a look at a bunch of examples here, just to give you an idea of how things develop with delta and the delta candles. So you see here the market is selling off. This is a 5-range G-mini. And what do you got? You got all negative deltas, right? The market's coming down in to the lows. The red line is making new lows. You could go to Ninja Trader, and it's a free thing. It's called current day open high low close, and a red line will be the low, or a green line would be the high. It's nice to reference where where the market's trading relative to the day's high or the day's low. So you're coming into the lows, all net selling, right? That's what you expect when the market's selling off. You expect negative deltas, and a lot of them, fast and furious coming in there. And what happens? You come down in here to this low, and all of a sudden you got a positive delta, 3559, 3601. It's a very strong positive delta. 3559 is much more than 1251, 1938. If anything, you can see the delta, you're coming down into the lows. The delta's getting smaller. You had this very nice, big, strong negative delta here, 456, but then, it gets only 1938 minus 1251, and then it changes to positive 3559. So you have, declining net selling coming in here. That's very obvious. That's very clear. Then you get a very strong positive delta here at the low. You can see the delta candles, strong, negative, less strong, and then it turns positive. So you have, sort of this trend developing here from very negative, less, positive. And, what happens? You hit the low and you turn. I mean, it gives you a strong buying signal down here at the low that, hey, this low is probably going to hold, and we're going to rally from it. So, you could have a very tight stop, right? You're coming into this low, but you got this bounce right here, the strong buying coming in. You're not coming into the low and, just sort of going sideways with a small delta. It's very strong. It's telling you buyers have taken over from this move down, previous chart right here. We're coming down, very strong selling. And then what happens? You hit the low. Buyers are really stepping up and being strong. They're showing their hand. It did come off a little bit in the next bar, what you see here. But then, buyers step right back up, very strong positive delta, and what do? We rally from the 69 level up to 72. Within, what is that? 20 minutes. So, I mean, I talk to traders, they're happy to get a couple ticks out of in the S&Ps. They're happy with that. I'm not happy with that. I want to get points. I mean, what's the point of trading for ticks? I mean, unless you're a local and you're paying, nothing in commissions, and you're trading, your turnover is hundreds of lots, thousands of lots a day. That you're trading thousands of lots a day, that, you're just happy to get, a point, a quarter of a point, or a tick rather, or a quarter of a tick, because your turnover is so much that you can, just play the, one tick is 1250. That if you get 3/4 of a tick, you're happy with that because you're doing it on such high volume. The majority of traders out there, myself included, we're trading for our own accounts. We're not locals. We're not trading tons of volume. We're trading 5 lots, 10 lots at a time. So to get 3 points on a move is great if you could do that, a few times a day on a high probability trade with low risk. I mean, you're buying it, right here off the low. You're gonna have to stop, a point. You're risking a point to get, 2, 3 points. Those are the types of trades that you want to be taking. So we rallied up. This is just continuation of the chart. So, this is this rally right here, right? 1429, that's this bar right here. And we start to come off. What do you see? You see the delta again, negative, right? The market's going down. Negative delta, negative delta, negative delta, negative delta. What happens? Okay, now this is right ahead of cash close. It's at 3 o'clock Chicago time, and the charts are in Chicago time. You get positive delta at 253. Next bar, 259. Positive delta again. You're coming off the low. Some buying coming in. You can see it in the delta. If you're just watching, for me, I'm fine reading the delta, but I know for a lot of people, especially, I try to explain. I work with a lot of new traders, and I try to explain delta to them. Sometimes they got a hard time wrapping their head around it because it's a new concept to them. But you know what? When I introduce the candlesticks to them, it really just, the light bulb goes off and they understand it almost immediately. And you can see we start to rally up here. Okay, you got positive delta. You got green candle. And get right at the cash close, you get very strong positive delta, and you just go up. This is going into the futures close now, but your sign was here. You're coming down, then you start to rally. Even if you got in late, all right, and you're getting in right at the cash close, somewhere here you could be getting in. I don't know, 71. You're getting up to 73. Again, that's a quick 2 points. So, as a trader, right, when you come into a low, you want to know, is the market going to come off that low, or is it going to continue lower? And, again, that's where delta is going to give you clues. Now, here you got, a move coming down. You can see the candles here, red candle, red candle, red candle. Start to turn around right here. Very strong positive delta, 700. Big green candle. Next candle is green, 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 green. It's all green. So it's telling you, hey, we're bouncing. You should pick it up. You could pick it up right in here. Part of being a trader, right, is making decisions. So you got to, one of the things you have to do is you have to, realize, hey, we're coming into a low. All of a sudden, we're changing, right? You got negative deltas. Now we're positive. Are we going to be coming off this low? Now that's where delta comes in handy. If you're not even looking at delta, you just see coming into low. Hey, we're bouncing up here. By the time you realize, hey, we bounced up off this low, you already missed the move. But delta is keying you into this move, changing, very early. And the opposite is true is when you get up near highs. You want to know, is the market going to go higher, or is it going to go sideways, or is it going to come off? Unfortunately, you don't know when the market's going to go sideways until it does go sideways, but you can usually get a clue that, the market's going to sell off from a high or rally from a low by looking at delta. So here we go. We're rallying, right? You got positive delta, positive delta, positive delta. Okay, here you hit a new high, got negative delta. That's a sign that, hey, we're at a high, we got negative delta. The next bar, negative delta again. Small. Now I don't even have delta numbers. I just have the candles, just to give you an idea. The visual aspect of how this is useful to you. So what do we got? Again, we're going sideways right now. Green, red. But what do you got? You're at your high, red, 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 one green. Okay. Step it forward. It's going forward. Every 2 bars. So you got, green. Now it's alternating. Green, red. Still up at that high. Green, red. This time it's a small green. Before you had some pretty decent greens. Now it's small. Now here you got a big red again. Big red again. What do you got? More red. More red. You got a stack selling imbalance here also. and you see it just falls over. Again, this is around the cash close this time, but I mean this was a very protracted move from basically 9 in the morning until the close. So it was a very slow day, but you're seeing the signs in here with the delta. You're up here at the high and you got all this negative delta. It's worth taking a shot, especially when you see the sell and the balance in there. And so it's worth taking a shot somewhere in here, around this 88, 89 level, that, hey, you know what, we're at this high. It's mostly negative delta. What's my capacity? I could get short somewhere up here at 89. Yeah, I could have a stop at 91. That's a 2-point stop. Okay. But you know what? Even when we're up here, it's not like we kept bouncing up there at 91. I mean, a high is 90 3/4. But even that, we're making, sort of lower highs here. And you got, again, you got strong negative delta. Every time we sort of come up a little bit, peek our head up, towards the high, it gets spanked out back down. You got negative deltas, negative deltas. Then we go into the cash close here at, at 3 o'clock. We're coming off, right? Like I said, realistically, you could be getting short somewhere around 89, 88 and a half even. And we come into the close, we end up the day down at, what is that, 86. 86 1/4. So that's, again, that's a decent, he's giving you some decent trades. Delta, I mean, most people don't even know what delta is, let alone use it. And so, if you're not using it in your trading, then you're really missing out on a very vital piece of information. I mean, it's like, imagine, someone could say, hey, I'll give you this tool that'll tell you, what the overall market sentiment is. We would be interested. Of course, I mean, you should be if you want to make money in the market. I mean, you shouldn't just close yourself off to new ideas. So, what's the real secret of order flow delta candles? They work on normal bar charts. And, because I realize, some people aren't interested in order flow. Although I do think, to really get the maximum out of it, you should use an order flow chart. But you know what? I realize, and I respect, the ways other people's trade, and maybe order flows trading isn't for everybody. That's fine. So we have it programmed to work on a normal bar chart. Let's go through some examples here. This is crude oil, right? We're coming off, boom, we get a big down move. Take out the lows, negative delta, strong. Take it out again, more negative delta. But what's the difference this time? The first time you took out the low, you did on very strong negative delta. Second time, less negative delta. And you just hang around the low, test the low again, you got positive deltas. So what do you see? You're seeing the selling drying up, and it turns positive. Buyers have taken control down here. The sellers were obviously dominating here. This is very obvious. But you know what? When you're down here, as a trader, what are you thinking? Are you thinking, hey, are we going to still go lower, or are we going to bounce? You need to make that decision, and you need information to to tell you the answer to that decision, and that's where delta comes in. So if you're watching the delta, you can see it's positive. Buyers have taken over. I mean, they haven't taken over to the extent that you saw down here with the selling, but you can see it. They're taking over. They're in control. And what's the market? Market rallies up from this, what you want to call it, 41.10 up to 41 1/4. That's a nice move in 10 minutes. I mean, some people, they're going to say, well, I got to get a dollar out of every move in the crude. You can only get what the market gives you. If the market's only going to give you 10 or 15 cents, take it. Look for the next trade. There's another example. Okay, what do you see? This time, right? Selling. Okay, boom. You have a big, strong down candle. Okay, fair enough. Market's going sideways here. Delta, it's kind of alternating. Then what do you see? If you're just looking at this bar chart here, you see, well, market's kind of going sideways. Honestly, in this delta, I don't really read much into it because there's not a lot happening in there. But the sign right here is all of a sudden you see, hey, going sideways, delta's growing. Positive, stronger positive, even stronger positive. You got a couple bars here, a chance to get in. You could pick up on this right here, that delta is increasing. You can get in here at 21.77, that area, 76 3/4, whatever that is. And, over the next, 10 minutes, 15 minutes, we rally up from the 77 area up into the 80s, 81, 82 area, and, what was the sign that we're breaking out of this sideways market right here? The delta. Like I said, if there's one thing you get from order flow, it's delta. Okay, what do you got here? Minis, 1 minute chart again. Similar. We're at the highs. Okay, you got a couple bars here, very strong delta. Going into the high, that's what you expect. But you're at the high. Oh, well, you got negative delta, and you see 1, 2, 3 bars, negative delta. Getting stronger, And then what happens? You fall over 77 and a quarter, 77 and a half. You trade back down into the 76 and a half, 76 3/4 area. That before you start going sideways again. So it keys you in on these moves. Again, if you're not using delta in your trading, you're really leaving a lot of money on the table. You're leaving a lot of information out there that you could use for your trading. Even if you just find 1 or 2 trades a day using delta in your market, it's worth it. And as a trader, right, you should always be wanting to add new things to how you trade. I don't know what people do for a living. Other people do. Whether you're a doctor, if you're a doctor, right, you want to go to you're always going to seminars to learn the new medical advances, and you're going to use that in when you're operating. If you're a car mechanic, right, cars nowadays are all pretty much electronic. Heck, you go to your key fob, it's got basically all the data for your car. You just you go to the car dealer, they put it in the machine, and it tells them what needs to be done. So if you're a car mechanic, right, and you're the old school type that is going to fix everything with a wrench and not a computer, you're going to be out of business. Markets change. Traders need to adapt, and if you're using the same old things from 50 years ago, can you make money? Yeah, you can. It's kind of a struggle. But what would you rather use? Would you rather use the old tools, or would you rather use the new tools? Would you rather use the things that not a lot of people are using? And while it's giving you an edge, yeah, I mean you should. You should always be open to learning new things in trading. So I have a bonus if you get the order flows delta candles. I'll give you the information. You order it. Give you also how to read it. I'll give you my cheat sheet of candle patterns that I've used in my trading over the years on delta candles. So, it's not like, hey, here's the indicator and it plots these candles. You should know what sort of formations you want to be looking for. There's about 10 or 10 more or less in, formations that you should be looking for. I mean, I'm sure, you'll come up with your own as well. But, the thing that bothers me a lot of, I mean, as a, I'll say as a vendor, system vendor, or whatever you want to call it, I see people selling software for hundreds, even thousands of dollars, and it's like, here you go, use it yourself, and they don't give you any instruction. That's why I'm including a cheat sheet so you know what to look at in the market, and so at least you can hit the ground running rather than sitting there trying to figure it out, by yourself, and worse, lose money. Nobody wants to lose money in the market. I hate to lose. I hate having losing trades, but I mean, losing trades happen. It's not, every candle formation is going to work out perfectly, but you want to have, you want to have a basis for taking a trade, and delta candles, will give you that basis. So, thanks for watching this video. You can get the delta candles at my website, www.orderflows.com, or there's a link in this video. I think you can click on it, or click on the description of this video, and it'll take you there that you can order. Again, if you get just 1 or 2 trades a day, but if you get 1 or 2 trades a day that's giving you 1 or 2 points, then happy days. It's not about taking dozens of trades a day. It's about taking a few trades that are high quality trades. I mean, everybody likes action. They think, oh, the futures market, you got to be buying and selling all left and right. No, you don't. So unless you're a local, a cardiac kid type trader where you're in and out all day long, then yeah, okay. But as a trader, when you're trading for a living, as an intraday trader, you don't want to be taking a lot of trades. Rather, you want to be taking trades that give you a high chance of success. I mean, in no sense taking borderline trades. The market's open every single day. You can trade pretty much every day of the year, almost around the clock. What country you're in, there's always a market open somewhere that you can trade. And the delta candles will work on whether you're trading E-minis, whether you're trading gold, whether you're trading crude, whether you're trading euro currencies, what have you. They'll work on pretty much every futures market. I haven't tested every single futures market. I haven't tested on South African white maize or uh, some of these other esoteric contracts, Tocom gold or anything like that. But the main contracts, yeah, I've traded with it and I've made money with it. And now I'm happy to put it out there for everybody else to use as well. So give it a try. I think it can change a lot of the way, people trade and approach the market. So thanks everyone for watching this video, and I'll see you on the inside.